I think did we meet somewhere?
Yeah.
We met at a Legacy or something, right?
There, I think here too, because I remember Brooke
She's a good
did
girl.
one on the life insurance.
Oh, that's where it was. That's where it was. Okay.
No, they need attention.
Riley's. She's pretty good.
All right, guys, I think we're gonna start. Just honor everybody's time.
That's cute. Reactions.
Leo, vamos a empezar, Leo.
Oh, she knows.
Vamos a empezar, and we'll let everybody. I know. You want to sit over here? You want to be over there, back there?
Sorry.
Well, welcome everyone. Welcome for coming to our class. I always feel it's always an opportunity for us to share and to support each other. So thank you for being here and supporting us and just learning, right? We're here to share, to interact, and expand, evolve together. So today what we're going to be sharing, it's about maximizing our opportunities. We're going to talk about what's happening with the market, how we can adapt, and then the programs that we could offer to support you in that. So I think we all know each other, I believe. Eric, my name's Lala Delgado, Sandra.
Yeah, I think we met before.
And we're with Champions Mortgage. And I was gonna ask how many of you guys know that we have an in-house lender, but I think you guys better know. If not, we're in trouble, right? How many of you? So we have an in-house lender here in this building. And what I wanted to do is, it was interesting because I was like, okay, I'm gonna share a story. I'm gonna share a story about myself and how I got into lending and everything. And then as I was getting ready, someone sent me this video and I was like, oh, okay, that must be a message. Maybe I'm supposed to share this message with someone. It kind of came perfect timing. We call it divine timing. And then I'm like, well, let me see. Should I start this class with this video? And the answer was yes. So we're gonna play this video. And the reason why we're gonna play this video is it has a lot of powerful messages, and it's about 3 questions that will change our life. And it's going to be Tony Robbins. And the reason why I'm sharing Tony Robbins is my story goes back where I think I was 48, 47. Well, actually 28, 27. But I ended up going to a Tony Robbins live program. And I don't know if you guys ever had an opportunity to go to Tony Robbins, but if you ever get that opportunity live, not, online or Zoom, it's powerful. And so I found myself in this Tony Robbins room, VP, everything. Our broker was really adamant about, getting in the front of everything, getting in the mix of everything. And he did this powerful meditation. And back then, I didn't even know what meditation was. I didn't even know, what all that meant. But through that meditation, it made me reflect on my life. It made me reflect on so many things, why I was feeling the way I was feeling. I everything was great. Like I had success, I had my house, I had investments, everything was going great, but there was something missing inside of me and I didn't know what that was. I couldn't put my finger on it. I wasn't fulfilled, even though outside, it seemed like it was. I looked very successful, I had a career, I had a great family, everything, but there was something missing inside and I didn't know what that was. And so I shared the story with you because sometimes we might find ourselves in that. We feel like we have to keep going and going and doing more and attaining more. And through this Tony Robbins is where my journey began. My journey began on a spiritual path. It began on shifting my life for a place of not so much material things, but really getting in touch with myself, really opening up myself and saying, who am I really? And how do I want to live my life? And so when I heard this video today, usually I don't listen to it after my classes and meetings, but I happened to listen to it. And I'm sharing this video in hopes, like if there's anything that you guys get from this class, if it's just something from this video, then it's a success. Mm-hmm. So I'm gonna play it for you and then we'll talk about that and then we'll go forward with everything else that we'd like to share. And once again, it's 3 questions that will change your life.
3 questions. First question is, what are you going to focus on? Right now, whatever you're focusing on affects you. If you're focusing on how you're going to use what you can learn this weekend, you could be focusing on the smell of your neighbor after all that jumping up and down. There's so many things you can focus on. We don't focus on everything. We focus on a small number of things, and that's what we experience in life. And focus right down equals feeling. Whatever you focus on, you're going to feel, even if it's not true. Have you ever had somebody tell you something and said, you think John is your friend? John's not your friend. He's talking behind your back. And you go, no, he's not. John's my friend. You misunderstood. But if 2 or 3 people tell you John's talking behind your back, you can get pretty pissed off because that's really just hurt, right? And then maybe you confront John. Who's ever done this? Confronted somebody about something you've done and then found out you were wrong and felt like an idiot. Who's ever had this happen before? Say, ah. So the most powerful decision we make, most of us don't make it consciously, is what are we going to focus on? Because you could be focusing right now on the blood rushing through your left ear or the touch of your clothes against your skin, but you don't. Most of what your brain does is distort, delete, and generalize to make life simple. And the problem is you distort, delete, and generalize, you miss a lot of your life. So we want to kind of see if we can't get out of that. And what we got to do is figure out what the focus is. Let me give you 3 patterns of focus. You tell me which of these are you. And there's no right or wrong, and don't get personal about it, because if you don't like your answer, we can fix it. I want you to think like software. Here's my question. If I asked you, there are 2 things you can focus on, what you have or what's missing. Which one do you spend more time focusing on? Shout it out. You can hear in the room, people are not taking a poll, one is dominant. Raise your hand if you focus more on what's missing. Raise your hand nice and high. Keep your hands high and look around this room. It's about 95% of the room. Now I have a simple question for you. It's a really important question. It's a simple one, but an important one. Just think software, don't think personality. If your brain is constantly focusing on what's missing, how can you ever sustain happiness no matter how successful you become? It is impossible. Raise your hand if you see this. And it's dominant in this room because most of you, how many consider yourself to be an achiever? That's part of who you are as an identity. Yeah. So as an achiever, looking for what's wrong for a moment so you can fix it can be a good thing. Well, what happens is it becomes a habit, and then it doesn't matter how much you achieve, you're not happy. You know how many multi-billionaires, how many entertainers with their Oscars or their Emmys or the Grammys that I work with, who you think would be the happiest people in the world? They're worth almost $1 billion, some of them. They're the best in the world at what they do. Everybody loves them, and they're miserable. I'm the call. Why is it? It's because they keep focusing on what's missing no matter what they have. That's one pattern this weekend. If you only change that, it would change your life. What happens when you focus on what you have? You feel alive. You feel no scarcity. You feel joy. How many of you have lots of things in your life that if you focused on it, you can feel grateful for, you can feel excited about? How many got lots of things like this now? Say I. But it doesn't exist unless you focus on it. And we all have patterns of focus. The second question is, what does this mean? Because the minute you focus on something, you have to give it a meaning. Is this the end or the beginning? Is God punishing me? That's why this problem happened? Is God challenging me? Or is this problem a gift from God? See, if you think it's the end of a relationship, are you going to feel the same way, act the same way as if you think it's the beginning of a relationship? Yes or no? No. The meaning changes the answer to the third question, which is, what am I going to do? Because meaning equals emotion. Whatever you give a meaning, you're going to have a feeling. If you think God is punishing you, you're going to have a very different feeling from that meaning than if you think God is challenging you or this problem is a gift from God. How many follow here? Say I. People oftentimes have trouble in their relationship. You know why? In the beginning of a relationship, what's your focus? Are you trying to get them to give you things? Is that the primary focus? When you really love somebody, what will you do for them? Shout it out. What will you do? What will you do? What will you do? If someone says to you, would you take out the trash? Well, take out the trash. What else can I do for you? In the beginning. But after 7 days, 7 weeks, 7 months, 7 years, or 70 years, somewhere between 7 days and 70 years, they go, did you take out the trash? What do I look like? You're a janitor. I don't know what it is. We used to have so much passion. What happened? If you do what you did in the beginning of the relationship, at the end of the relationship, there won't be in it. Because in the beginning, it wasn't a trade. You weren't measuring. Your meaning, you were focused on how to give. How many can relate to this here? Say, I. Once you start measuring what you're getting, it's a transaction. Transactions don't make anyone feel good long term. I'll give you another one on focus, another pattern. Do you tend to focus more on what you can control or what you can't control, what's outside your control? Which do you tend to focus more on, what you can control or can't control? Watch this, it'll be a different pattern this year, I guarantee you. Raise your hand if you focus more on what you can control. Raise your hand. Keep your hands up nice and high. Look around. It's about 80%. How many focus on what you can't control? Can't control. It's about 20. So it's about 75, 25, or 80, 20. But notice this one is more focused on what you can control more people. That's why you came here. How many came here so you can take more control of some area of your life here? Say, That's why you're here. And how many of you know someone that you wish came with you that freaking needs this way more than you do, and they're not here? Why? They focus on what's missing, I guarantee you, and they focus on what they can't control, or they think this is just some guy talking and I can't change your life, which is really an unconscious belief that I can't change it. Now, some of you are both. What's missing is your focus and what you can't control. How are you going to feel? Just forget you personally. Think as a software in the brain. What is someone going to feel who's constantly focused on what's missing and what they can't control? What would you have to feel, my friends? Come on, tell me. Sad, frustrated, angry, depressed? But think about this. This is how we function. So why are they still depressed? Because they're still focusing on what's missing and they're focused on what they can't control. And I'll add one more. Do you tend to focus more on things from the past, the present, or the future? We all do all three, but where do you spend more of your time? Raise your hand if it's the past. Now look around the room. It's only about maybe 1 or 2% of the room. Because if you focus too much in the past, you wouldn't even come to a program like this. You might get enough of it and say, I want to change it. But if you focus in the past that you can't control it, it makes it pretty tough. How many focus more on the present? That's where you spend more of your time, in the present moment. How many focus more on the future? Watch this. Look at this future-based room here. Because that's what achievers do, right? We're focused on how to create a better future. Maybe you came for that. So what's the goal? Well, certainly you want to use all three, but if you're going to spend your predominant time and you want enjoyment, it's the present. If you want to create a great life, it's the future. So it's a balance between the present and future. These three patterns alone could change your whole life. What if you came here and you're always focused on what's missing? We retrain your brain to find all the unbelievable magic and magnificence in your life, and you keep seeing it, feeling it daily. Will they give you more energy or less energy? Hell of a lot more energy, and that's what's going to change it all. So our focus is the first question. The second question is what's going to mean. Is this the end or the beginning? Will that change how you feel? And based on how you feel, will you answer what to do differently? You bet. These three questions are happening every moment of your life.
So what do you guys think?
Powerful.
Powerful, okay. Yeah, definitely powerful. Same thing here. I asked myself those questions, and like I said, I started to change my focus. I started to change my focus on gratitude, and that's why if you've been to some other classes, I always start with turn to someone and say, what you're grateful for, and that helps us ground, that helps us remember, like, oh yeah, I'm grateful just for my breath, just for being alive, just for waking up. And so what he talked about was focus, meaning, and how we're going to take action. And so I brought this video, and I wanted to share this video with you is because when we started this business, we were with that passion, right? We're like, yeah, I got my license and everything. And then, now, we're faced with interest rates, they went up, and, all these changes with the real estate market. And, we're at the last quarter of the year. And we're like, what happened to the rest of the year? And how is 2025 going to look like? And we should already start thinking of 2025. We should already start marketing for 2025. And, there's just so much. But if we ask ourselves those three questions whenever we're faced with a challenge or something that we like to overcome, like, what am I focusing on? And, the meaning we give it is going to create the emotion. It's either going to make me excited, or I'm going to get depressed, or I'm going to be like, oh God, this sucks. Like my business is not doing. So when we focus on something, it's going to either give us the energy to thrust forward, or it's going to keep us stuck. And that's what I learned through my own self-experience in my own business and everything that I'm doing. And so when I heard this, I said, okay, let me share this, because that's what we're going to talk about today. We're going to talk about how we can adapt to all the changes. And I know everybody that's here is pretty much producing, right? And even if you ask yourself, like, okay, where am I focused now? Am I stuck on the last quarter, or am I already thinking of 2025? And how can I start planting the seeds for 2025? Not only for myself, but with the partners that are around me. Because I think right now we're in those times of partnership. We're in those times of collaborating. We're in those times of integrating. It's not about us doing it alone anymore. It's about us collaborating, as realtors, as lenders, who are my partners and who is my team? Because if we start collaborating, now we're gonna be moving in different directions. You're gonna have people coming in and bringing creative ideas, creative decisions, for everything that we do. So I feel that's the time that we're in right now, and we're gonna share about that. So how can we maximize opportunities for the clients? What's new and what's changing? So educating past and present, setting the intention is gonna be how we can educate past and present clients. What's going on with the interest rate? What are the trends? Because anytime you tell someone you're a realtor or a lender, the first thing out of their mouth is, what's the interest rates? And you're like, oh, well, what's today's interest rate on a 30-year fix? And you're like, so how can we educate them and help them understand the trends? Like, yeah, the interest rates probably went up to 6.77 today, but you know what? These are the options we could do to bring you down.
And you bring a really good point. Is it possible that one from the mortgage team can send us, maybe company-wide, an email of, interest rates for this week are this, so that we can in turn forward it to our clients or prospective buyers?
I mean, we could do average, because remember, in lending, it's always, so like the one that I'm gonna show you right now, I put a little asterisk, like national average, right? Because we could give you the general, and we're gonna talk about that, because I think the whole of this class is how to maximize opportunities, is how to work in partnership with that, so that you're not the one quoting the rates.
Correct.
That we're working in sync together, so that we could educate the past and the present clients on what they qualify for and how to submit that offer. Because I think what's happening, and what I've seen, and I'm guilty of this as well as a realtor, is we work with our buyer, we get the approval and everything, we submit the offer and then you get it to the lender. And then it's like, oh, all these things changed, the rates are higher, and you told them, oh, it was 6. And believe me, they'll remember that quote. Even though you tell them it's the average, rate, they're gonna think, no, you told me a 6. And now they have that number 6 stuck in their mind. So the way we would like to present it here is, if it's possible, when you're meeting with the buyer, to also have your lender there, your partner, your preferred lender, have them there. And I know Sylvia does that, and Sandra does that. They invite the clients into the office if it's possible. If not, maybe they're open to meeting with you there. And then now you have a conversation, and now you're both coming in as a team to create the best options for them. Because they might have it in their mind that they want this product, but they might not qualify, but they might be in a better program for them, right? And so now you're structuring the buyer and educating them, and so that when you submit the offer, now you're gonna know how much closing costs you're gonna ask, how we can buy down the rate and stuff like that. So we're gonna go over that. But we could do that, but I think right now we're in the times to evolve and grow together, is to collaborate and integrate. And how can we do that with our partnership?
And my departure point is because I receive from other lenders. I don't want to share that with my client base, So I would like something
to have an idea.
Right, just to have a general idea,
Okay.
but something that comes from in-house,
Yeah.
So that I can just forward. I'm not saying that this is me, obviously that's how I feel.
Yeah.
But because I get past clients inquiring where they maybe want to make a move. So if they want to make a move, they're going to have to sell, they're going to have to buy, So my experience is that it keeps the conversation going, because I have some of those, past clients in my home bot. So they get the property value. So that gets a conversation started. So I think that, if I'm already doing home
just
bot,
to have a conversation.
Now have a secondary piece that I'm sending them on a weekly basis or monthly basis, it just kind of supports one or the other. But I don't want it to go from another lender. You know what I mean?
Yeah, and we're going to talk about how you can co-brand. So not only are we just talking about the rate, we're actually co-branding products out there. We're actually talking about, programs, and hey, did you know this? Did you know that? Because they probably don't. So we could co-brand. Whoever your preferred lender is put them there. Hey, did you know about this program? Did you know that the HELOCs are this? So we're kind of putting that seed and we're going to talk about how we can maximize that opportunity. And then also, we're going to talk about how we can, any hurdles or challenges that we run into. So adapting to the current market conditions, and, everybody's talking about the rates right now. And I don't know about you guys, but I think the products that we're seeing out there are FHA 30, or maybe you guys can share with me, like, what kind of programs are you seeing out there with your clients that you're putting the majority for the purchases? What are we closing? What would you say, Sylvia?
For me as a lender, I would say, it's almost 50-50, conventional and FHA. I think you had a very good point. There's so many products out there that when you fixate yourself on the rate for conventional is this, people will keep that in their mind. Oh, it's 6%, but they don't understand that the rates vary every single day.
Exactly.
And you're thinking 6%, you may not qualify for the 6%. Or, well, there's also FHA, which is 5.25, or you know what I mean? So this is a great way to start training them so that they don't get fixated on a certain number. They're thinking the one thing I want to know is rate, but there's so many other things. What do I qualify for? What do I need? How do I get there? But for me, it's been conventional and FHA, and actually more of the items are resurfacing right now for me.
Right.
I'm busier with that right now.
And we're gonna talk about that, like how can you tailor to like knowing your area, your niche, and then what kind of flyers or what kind of programs you want to send that niche, because it's not for all, like depending on the open house, right? Like if we're listing a beautiful house, a luxury home, like how to market for that, like your programs, you're not going to offer them the same type of program you would for someone that's, maybe you're going to get a lot of first time buyers, versus just give me a flyer for my open house. Going a step further and saying, okay, well, what kind of buyers are typically are going to be coming into this open house, and what kind of programs can we assist? So getting creative in that way is now we're really targeting that niche. Depending on where the house is, depending on the buyer, the typical person that's going to walk in, and maybe people who are just looking loose. Did you know about this program? And so we're going to get into that. But, so just the challenges that we're facing with the buyers, and what would you say is the market condition right now? Like if I show you guys, I'm going to show you guys the trend. I think educating our clients of that, because they might have something in their mind. It's like, oh no, these are the market conditions. That's why they always ask us, what are the interest rates? But in reality, they're asking us, what's the trend right now? Where are we at? We don't know. So that's an opportunity for us to spark a conversation. Oh, well, actually this, and then we get creative with our responses. And then depending on their response, we're going to engage. We're going to kind of probe and see, well, why are they asking? If they're asking, that means they have some kind of interest, and see where they're at. It might just be a refinance. It might be that they want to pull out some money and buy an investment, but just kind of planting that seed and really, instead of helping them not react, but adapt to this new trend, this new interest rate trend and everything that we're having here. So just really, obviously, as professionals, we have to stay informed, like you said, Alia. And so we can support you in that. You know what, Alia, what are your typical buyers? How can we support you in that? Let's look at our programs and see what kind of buyers we could help you with. Get creative in that way versus just the standard, what we're working with in that particular neighborhood. And then, so I pulled this yesterday, and that's the national average. I have a graph actually. So, this is for your information, but I think it was maybe 2 weeks. We saw 6.125, I'm sorry, 6 and an 8. And maybe Sandra could talk a little bit more about this, but this is the average as of yesterday, national average. In California, it's going to be a little bit different, but it's an opportunity for us, even though they look a little bit higher. Why? Because they're still 1% lower than last year. The interest rate is still lower than last year, and no one's talking about that. And if you tell that to your clients, hey, yeah, interest rates might be 6 and an 8 or 6.5, but they're still 1% lower than last year.
Everyone wants it back down to 3.
Exactly.
I give you 2.99.
Yeah,
they want
that. I got one at
Exactly.
2.99.
My suggestion would be to have your borrowers talk to the loan officers if they have any questions in regards to the rates, because there's a lot of social media, just the news, there's always, sometimes there's like this panic modes, where they're like, the rates have gone up. And I've had instances where loan officers, they're calling me like freaking out, hey, the rates are going up, should we lock? And then I look at the rates, I'm like, well, I'm looking at the rates and they've actually gone down, So always, I would suggest always have your borrowers talk to your loan officers, just so that kind of, for peace of mind and to calm them down, because, with every program, the rate does fluctuate, it could be a little bit lower than what they had initially started, or just, a little bit higher, just depending on where the market trends are at that time.
I mean, you'd be surprised with the rates being what they are. We're still having like fierce competition. I don't know how it is in Dai, but in LA, I mean, it's not
Yeah.
trying to get an offer accepted. So it's
It's
so there's still buyers out there that are
There's-
willing to.
right.
Yeah.
And even then, we're seeing a lot, like our lenders, one of our top lenders, they doubled their refinancing business. So even if they're not ready to buy right now, sometimes we forget to ask them if they have other properties, that they refinance to pull the equity out for an investment, a second home, finding out a little bit about that. This weekend, I was talking to a elderly couple, and if you would look at them, you wouldn't even think they had all these properties. And it just so happened that the conversation started, and I told them I'm a realtor, and then they're like, what's the rates? And then we started to talk, and then I find out they have all these properties, and, they're gonna want to cash out, they're gonna want to move some things around, and so without even knowing, you got a client, so we just talk about that very casually, and, but once again, we're still 1% lower than last year. And then there is an expectation, just to let you guys know, that we are expecting another maybe 0.25 to 0.50, like half a point dropping by November, probably after elections. So they are anticipating the rates are going to drop. That's the anticipation, the forecast. So if they ask, oh well, we are looking, we are expecting, this is what the crystal ball's looking at. They are dropping, but I think just setting the awareness that we're still lower than last year, is a good conversation piece as well. And I think, like I said, like 2-3 weeks, I think we were locking loans at 6 1/8, 5.99.
Yeah, the rates, I think, over the last couple of weeks have increased a little bit, so, but again, they are expecting to drop again towards the end of November or after the elections.
Yeah, and buy downs, because another thing that our lender was talking about is just buy downs. Like sometimes we forget, and that's why it's important if you work with your partner, because you can negotiate that in your offer. Say if the seller is willing to pay closing costs, you could use some of that money to buy down the rate. And if they are rate sensitive, okay, well, let's figure out a plan. We can look at a range, and then how much is that gonna cost you? Now you're working with your lender partner of what, 1% buy down would be, or how would that look like? Because some people have the money and they're willing to buy down the rate. I know I did that with a lot of my clients. We bought down the rate and they were happy with that. Half a point or a quarter might make a big difference. This is how we can stay on top of our competition. And that's why it's important that you work with your lender ahead of time, because if you have this discussion about buying down, how to submit that offer to help with the closing costs, and then, you'll have some for buying down the rate. Now you can compete with your other lenders, for that loan, right? So that's why you see some of these, I was looking at some of these people that are advertising like 5.5, 5.75. But if you look, there's a little asterisk, and then they tell you, oh, buy down of 2 points, So people are not looking at that, but the whole thing is getting people to call you, So, we want to be honest, but at the same time, there is, buyers out there, even people who are refinancing, they're willing to buy down the rate. So let's talk about that. We can talk about that as well. And like I said, one of our top lenders says that they are seeing that, like they are seeing people buying down left and right. So the impact on both real estate and lending equals opportunities. And we've been talking about that, looking at their credit scores. Maybe we could up it up a little bit to get them a better rate. Considering place to buy down, we talked about that. Working with closing costs, now that we have to do that ahead of time. So once again, we're just looking for opportunities so that we could engage in the conversation, and then that's when you send them to us, and then the lenders can look at all the programs. Because we're a mortgage broker, and I don't know if you guys know this, but the mortgage broker is able to shop the loans. If you're dealing with one lender and they're not a mortgage broker, they only underwrite to specific guidelines, specific underwriting terms, right? When you work for a mortgage broker, that we're a mortgage broker, we could shop the rate, we could shop the programs. And that's the difference, because if you have those clients that they haven't been able to be placing your standard conventional financing, you bring it to us, we're gonna find a home for it. Also in commercial loans, don't forget about commercial loans, we could do those, we're approved with commercial. So, and if we don't have one in-house, we'll find one, because we have that ability to work with other lenders. And so that's why there's a lot of flexibility here with other options. If we need to get creative, like Sylvia said, the I-10 program, you know, we have very aggressive lenders that, you know, are able to close deals that other lenders weren't able to close. And once again, it's just learning the niche that you want to target for 2025, and then working with certain programs that are going to service those clients. And then overcoming hurdles and challenges, why it's important to work with a lender partner planning the seats for 2025. So here are just some of the challenges. Challenge number one, buyer hesitation. And once again, this is probably they're hesitating because they're not understanding. So if we educate them either through buyer training events or, you know, sitting down with them, explaining to them like this is the way it works, then we're giving them the power to make a decision. How buying down the rate will give them, you know, a better interest rate and, you know, the cost involved in everything. Now what we're seeing is a lot of our partner lenders, they're offering incentives to buying down the rates. We just had one for this month. They were allowing us as lenders to reduce at 0.75 basis points. So we, you know, if you did a refinance and you submitted by this time, they were trying to up their business, they were offering a lower rate for the clients. And so there's incentives out there that everybody's offering that you might not know. So once again, we could, you know, offer flyers for that and co-brand with that. Once again, I know we want to get the purchases, but there's two things, purchases and refinancing. Even though you might not be selling them or helping them buy a house, it's another way to connect with the client, with the past client. You know, they might not be ready to buy now, but they're gonna remember that you helped them when they needed that. And then they're gonna, you know, that's just a way for you to stay there. Hey, how did that refinance go? You know, did everything work out? And, you know, they're gonna be happy, you know, and then they'll remember you as a realtor. So a lot of times we forget about refinancing, but once again, it's about servicing our clients, not just for the listing and selling, but throughout the whole, life, through clients for life, whatever their needs might be. Even if they have questions about taxes or whatever, we're gonna be there. And then challenge number two, affordability. You know, so looking for programs that are affordable for that client base, that niche, that neighborhood. And Sandra's gonna talk about some programs that she put on the desk there that, we can make it affordable for them. And so a lot of times people think, oh, I can't afford a house right now, or how can I buy a house? That's getting creative with your lender and customizing a program for them that will fit their needs. And then challenge number three, managing client expectations. You know, sometimes we want to get the business and we're like, yeah, you'll get a 6% or a 5.5%. We could do that. And then it doesn't happen. You know, and that's why I always offer, when I was just doing loans, I was meeting with the realtors. You know, I was sitting there as a lender, I was sitting there with them. We were having a conversation. Like I said, I know Sylvia does that a lot. She meets, with the clients here. And now you have the realtor, you have the lender side by side, and now they're explaining the programs. Instead of, well, I'll have my lender get back to you. The opportunity is right there. So this is how, once again, we invite them to the office. Look at our office, we're here. Now, it's more professional, and at the same time, it's a way for us to connect with the clients and they see your lender face to face. It's just, old school. We're going back to old school is what I feel. Anything like this?
No, I mean, I think you pretty
Okay.
much covered it. It's just about, educating the buyers, because I know a lot of the times they also have, oh, my comadre told me that they got this program that might have been great for la comadre, but it's not a great fit, and like Lala mentioned, we do work with a lot of lenders, so we have different programs, that might have not been a fit, for them, but we do have other programs that would be a perfect fit for their clients as well.
That's kind of like a puzzle. We're just, putting it together and everything. So that way there's no surprises at the end. Okay, and I think we talked about this, collaborating niche products. So first time home buyers, emphasizing education and relationship building. For boomers and downsizers, reverse mortgages, that used to be a big thing back in the days. Now it's coming back. I did a presentation the other day on how you can pull out money and then buy another house with that reverse mortgage. So let's not forget about the reverse mortgage for people that are 55 and older. They have a lot of equity, but they don't qualify with their income. So that is an option. Once again, it's not for everybody, but if it's a fit for them, we could come back to offering that. So if you're working 55 and over communities, that's another flyer we could do for you. They want to downsize or relocation. We're seeing a lot of people leaving, investors in short-term rentals. So once again, these are just niches, like, whatever your market is, tailoring the program for you so that you could, when you're door knocking or you want to do your mailers or emails, this is something that we could do. And then luxury markets. Right now, I'm seeing a lot of that. I'm seeing luxury markets are pulling out HELOCs. So we have people who have a high net worth clients who can still afford the larger homes. You're talking about a lot of doctors. They want to pull out money. They want to move their money and stuff. So HELOCs are coming back. We're seeing a lot of HELOCs now. People have acquired a lot of debt because of COVID and many other reasons. And so HELOCs are a big thing right now. I'm getting more and more calls for jumbo loans for the luxury market. And so once again, we can shop those because your standard bank is probably gonna could only do your HELOC maybe 300,000 to 50, but we have other lenders that can go higher. And so if you find yourself in a luxury market, you can advertise HELOCs. They have a lot of equity there, and they can pull that money out for a second home or what have you. So I'm seeing a lot of doctors doing that right now. They're pulling a lot of HELOCs. They want their money out. Any questions about that? Any comments? No? Okay. No. Okay. And then, so this is just a recap of everything that we were just talking. The thing is that now is the time, we're at the last quarter of the year, starting right now, planting those seeds, sending out those flyers, talking about these programs, because whatever you do right now in these 3 months, it'll probably pan out by January. So the best thing we could do is when January comes and you have, your buyers and your sellers wanting to do it because you've already done the groundwork for the last 3 months. Now the seeds are going to start growing and you're ready to go. So that's a great way to start our year instead of, oh, let me start my year. No, the year starts now. And you guys probably all know that because I'm sure you've been doing that. But if you need assistance with that, hey, I'm going to market this area or the city, what recommendations, we could work with that as well to create the programs that would fit that neighborhood, depending on what you'd like your niche to be. And then now Sandra's going to be talking about the programs that we have to assist you. And we have many programs, but she chose these programs for a certain reason, and she'll go over that and see if you have any questions.
So to start off with, the first program that I wanted to touch was on the 100% financing. I know that there's a lot of programs out there that do nowadays help with the down payment. This is one that I don't think we've showed or touched in any of our meetings or presentations that we've had before. This program is a true 100% financing. It is based off FHA guidelines on it. The second one, it's a silent second for 3.5% down payment, and it does not have to pay back. as long as they don't refinance or pretty much refinance or sell the house within the first 10 years. 10 years, it's forgivable. So after the 10 years, you know, they don't have to repay back that money. They do require a 620 mid credit score, and for the debt to income ratio, we can go up to 55% on it, as long as we have an approved eligible on it.
So now is that program?
It's 100% financing.
FHA financing, yeah. You have a flyer.
And
You have a
they
flyer.
have to do payments in this program?
Now for the second is a silent second, so they don't have to make any payments on it. The first one, it'll be, you know, the regular FHA program on it. With this program, there is no income restrictions on it, and they do allow non-occupant borrowers to help them qualify, which a lot of the other programs do not allow them to have a non-occupant borrower to qualify. So that's also, you know, a plus on it.
That's a good one.
They have the FHA too?
It's
It's
the
FHA?
first one is a
FHA,
yes.
The same
Yeah.
requirement, the same.
Yeah, then the minimum credit score that is needed is a 620 on it.
Pretty good.
With this program, you can do it for those buyers that are interested in it. I know Lala touch bases on it. You can do the 2-1 buy down program on it. That's the method they will allow.
You can.
Oh, you can?
Yeah.
You can.
So I mean, that's a great start, because with these programs, it is 100% financing, so your rates are going to be typically a little bit higher than your regular FHA loans. Just to kind of give you guys an idea, today for an FHA loan, the starting rate's around 5.875. For this particular program, because it is 100% financing, it would be around 7.75.
Oh, wow, it's a lot higher.
So it is, you know,
It's 100%
but it is
financing.
100%
Yeah.
financing, you know.
You get
so
them into a home.
Yeah.
You pay the price.
Yeah, so I mean, technically, the only thing if, you know, they would just have to come in with their closing costs rather than the down payment and closing costs. So it's a give and take, you know?
Yeah.
And, you know, a lot of people, they're okay with the higher rate and not having to pay back the second lien. I mean, this is I just wanted to touch base because this is one of the programs that we do have. Obviously, there's different programs out there, you know, and the agents can speak with their loan officers in regards to them. You know, they're very well know all the different programs that we have for the down payment assistance. They do allow single family residents, detached, townhouses, HUDs are allowed, and condos are allowed as well. And manufactured homes, they do have to be double wide.
But in a park or in
They
a
have to,
foundation?
they have
Permanent
to,
foundation?
it has to be in a permanent foundation, and they do have to own the land, they cannot be in a park.
So something like this, I would just say, something like this, once again, we look at our neighborhood, like you're doing an open house and look at the demographics and, you know, as you're talking about, this would be a great flyer there, you know. I haven't seen, you know, back then we remember the 80-20s, right? Remember the 80-20s, you know, and I remember people doing them. The only people that I still know that are doing the 80-20 or 100% were the credit unions. Now they're coming back again, you know, and so this is a great program because like Sandra said, even though the interest rate might be a little bit higher, yes, they can refinance. They don't have to stay there forever. You know, who stays there forever for 10 years? You know, a lot of people, most of the time, refinance or move in 5 years, you know. You can ask what the exit strategy is, what's the plan? But once again, this is a way for them to get into a house that they probably normally wouldn't. This is for that person that has very little or no money saved up. You know, and so when they're talking to you, you're already like, what programs? And that's why it helps when the lender's there, because the lender could already start, oh, well, these are your options. You know, we have A, B, and C, you know, based on their needs. So, you know, because if you're sitting there and you're trying to explain to them, it might not work, but if you have your lender there and you know, they know that these programs, it could mean from you making the loan or not making the loan, you know, getting the transaction, not getting the transaction. Now you're like, oh, wow, they're so knowledgeable, you know? So as a team, we were talking about team partnership, collaborating. Yeah.
This program have a prepaid penalty?
No, it doesn't. No, it doesn't have a prepayment penalty. The only thing is obviously if they do decide to refinance before the 10 years,
They
will
have to pay.
back the second on it, yeah.
That's the payment.
That's right.
Great for door knocking, right? And once again, you put your realtor and you put your lender there. Now you got both, and you know, it's a win-win.
The second program that they got the flyer for is second close and second mortgages. a lot of people are inquiring about the HELOCs, but also having a fixed second is another option for the clients. I think sometimes with the HELOCs, some of the clients do get a little bit scared once you tell them the rate on it. This one right here is a fixed second, so the rate will be fixed for the term of the loan, and they will get obviously all the money at once rather than just doing a minimum withdrawal that is required with HELOC. Yes.
Question,
Yes.
can you please explain the difference between a
I was just
HELOC
gonna say
and
that.
a HELOC?
Yeah. Good question.
A SHELOC.
HELOC.
I'm sorry, with what?
HELOC and a HELOC.
Or a HELOC and a closed-end.
Yeah, sure.
Yeah.
Oh, the
Okay.
difference.
Okay, well, a closed-end loan is, like I said, it's second, and it is fixed for the term of the year. You get the money, all of the money upfront. So if your loan is for 100,000, you'll get 100,000 upfront. There's no minimal withdrawal that you have to make, and you can't pull from it anytime once it's already paid out. It's just kind of like a regular first loan. With the line of credit, you do have different withdrawal periods. You can do a 3, a 5, and a 10-year withdrawal period. Within those first 3 to 5 or 10-year withdrawal period, you're able to withdraw from your line of credit, kind of like a credit card, and your payment within that period is interest only. Once that period of time that you made the flexible term for, then the rest of the term of the loan, it's when it's repayable. So if you made it for 10 years, the next 20 years, that's when it kind of closes, and then it becomes a repayment period where you'll pay towards the principal and interest.
What's the, do you know if this is, I'm guessing it's fully amortized, right?
Yes, it is.
Do you know what the ongoing rate is for a closed-end second?
Yes, so based on today's price.
I guess 10.
No.
He's like, I'm going higher.
Lower actually.
Oh, shoot,
Lower.
okay, yeah.
Yeah, so based on today's rate, it's around 8.99.
Okay.
8.99, and you can do a 10, a 20, and a 30-year. The 8.99 is based on a 30-year, so possibly if you go with a 10 or a 20, the rate could be a little bit lower. So just depending on how you want to proceed with.
A lot lower than the credit cards,
Yeah.
For
And
all
it's
the people that have,
tax-deductible. It's a write-off.
tax-deductible, that's
definitely.
plus. Yeah.
With this one, you can go up to 750,000 as far as the line of credit on the close and second, and the minimum loan amount would be 100,000. And you can do this for primary residence, investments, or second homes as well.
What's the combined CLT?
It's for full doc, so you show your wages, it would be around 85%.
Okay.
So that's actually pretty good.
So that's a combined first and
That's
second,
a combined, yes, first
Yeah.
and second.
85%.
And if it's for an investment property that you're doing the second lien on, it's up to 80%.
Which is really good.
Yeah.
So this would be good, like there's so many people out there with a lot of debt. We see that everywhere, so this would be good if you want, that's another niche right there. If you just want to target, lower your payment, take out a close, if they have equity. And once again, your title rep can help you with that. They can pull like your neighborhood, all the people that have all this equity, and then you can target that. I don't know if you guys know.
Owner occupied though.
No,
The
this is
owner
our
or-
second homes or
Oh,
investment
really?
properties,
Oh.
yes. And then with the close and seconds, you can also do it with purchase transactions. If
Should do
your
it, Leo.
loan to value is 85, 90%, but they don't want to have the mortgage insurance, then they can do a close seconds for the difference of the 5 or 10% to avoid it. So that's another, way to kind of avoid the mortgage insurance, and the payment will be about the same. So that's always a possibility as well. It's not just for refinancing, but you can also do it with purchases.
Cash flows,
Yeah.
cash flows, yeah. Any questions on those
You guys have
programs?
questions?
These are good.
So, and then, I'm sorry, one thing, which is I think is a big thing, you can do non-warrantable condos. They're eligible for the second, close and second. I know that's sometimes a big thing, so.
What do you mean, like
that's-
at the condo complexes?
Unless they're
Oh,
insurance
okay.
issues.
Yes.
What about purchases, straight up person? So like for home, is there a program like that for buyers, for someone buyers? And the unit that they wanna buy is non-warrantable? Is there any financing available for
There
that?
is financing available. You're just depending on the overall loan scenario that we would have to go with, because some lenders are very flexible with some of the programs, and you can get it done, and some of them do require a little bit more down payment. So it's just kind of overall looking at the loan scenario, and then we can see with who we can work and what we can do.
And that's what we're talking about, like working with the lender, because the scenario, so we find a home for it.
Yeah,
You know, so we have people like, well, we couldn't place this loan because A, B, and C, and it's like, okay, let's find a home for it. So now, and that's the difference between what I was saying, we're a mortgage broker, we're able to find homes for different, you know, creative financing. We move back to the creative financing, and that's why sometimes, you know, if you're not working with the right partner, you might lose that transaction. But we work, I mean, you know, we'll look, we'll search for something, and then, you know, we'll call, even if we don't have that person, but we find somebody, we could get approved to do it with them. You know, because that's the flexibility of a mortgage broker. We're able to find the home for it versus just one lender, these are the guidelines, this is what we can do, and that's it. So ask them, are you a direct lender, or are you mortgage broker? And that's the difference. You know,
yeah.
so
Like need to listen, you know, justify or confirm, you know, we've had, I've worked with her, she's had a couple real estate transactions where, other lenders weren't able to do it for whatever the reason might be. One of them was a perfect and loan. They weren't able to do it, we were able to get it closed. You know, we worked with one of the close lenders, and they're like, yeah, we can do it, no problem. So we've had those instances and those scenarios where other people can't do it, but because we do work with so many different lenders, you know, we have that relationship with them that they're willing to work with us and help us get it closed.
I have a particular scenario where I have this buyer that it's tight on their budget, but she did like one unit. There's a complex that has some nice properties, but they're having an issue and it's non-warrantable. So her lender wasn't able to do that loan. So we haven't done anything because everything else that she likes is obviously more expensive. And those, because they're having those issues, are more affordable.
Yeah.
So I'm gonna have to.
yeah, so
talk
those are
to
things,
them.
that give us
see.
the scenario and do that one. Yeah.
As a condo,
Yeah,
spot approval.
Yeah.
Yeah, and just another thing, just as a reminder, as realtors, you could work with, and Alia knows that, like, you know, she works with several Bank of America and some other banks, they're turn downs. So that was another way is working with, you know, if you have people that are working like commercial lending or commercial banks, or even standard banks like Bank of America, if you have someone that's working there, connect with them, because they have turn downs, let me tell you, because they underwrite to this specific, and then, so people are coming to them, they'll say, oh, we can't help you. Well, they need to send that loan somewhere else, or they just, you know, you want to make that relationship, and it's like, you know what, if you come across people that are coming here, they're either looking for HELOCs or close, whatever, even if you know, you're the realtor, but you're servicing that client, and believe me, if you connect with them, even if they want to refinance their house or they want a second or what have you, now guess what? They're in your CRM. Now you're able to contact them. When they make that move, they're going to remember you because you helped them. You know, so it's about service. You know, sometimes we do that, and so I want to remind you guys, like, think of people who are in the commercial lending or banks, if they're your friends or contacts, to get you in there, because there's turn downs, and then now you could talk to your lenders, and then we could find a home for it. So don't forget that. I see a lot of business with that too, because I just had a couple of people calling me, commercial lenders, saying, I can't help them, we don't do these loans. And they're big loans, and it's like, okay, you know, let's find a home for them. So that's another niche. So these are just reminders. I mean, a lot of this stuff we already know, but they're just reminders, because as the market changes and adapts, it's like, oh yeah, I forgot about that. We talked about having that same passion now going forward, and then thinking about, like, okay, I want to now work on this niche. Like, what is your niche? Like, this niche is working, okay, that's great, but it's about evolving and growing. I want to now target this niche, and how can I work with the programs that are available, not after the fact, before. So you're targeting with an intention, with a purpose. These are the type of neighborhoods that are going to need this program. So let me just market, instead of just kind of going out there, do you want to buy and sell? No, getting very specific about what we're fulfilling the needs. What are the needs? And that's what this class is about. How can we maximize the opportunities that we're in? But we have to educate and bring the awareness so that we could bring solutions to whatever the needs are. And so that's basically what we have to offer for now. We have a lot of other programs. We have the Home Possible, 0% down purchase, Home Ready. We discussed that last time. But other than that, that's our class. And there's just a couple of quotes here that we say, everything you ever wanted is on the other side of the fear. So, just dipping out of our comfort zone or whatever, the blocks are to get out there and, start targeting something different for 2025. And then we respect the past and create the future. So the past teaches us many things, what have we learned this year? And then with that, how can we create 2025 going forward? So that's it. Thank you guys. Thank you guys for attending.